You have to have certain rules. And you have to believe that trading is the same thing as any other skill you want to acquire. Majority of the, I mean, a lot of you guys are been on my webinar. A lot of you are new. So if I'm kind of talking to someone who's new, is that to be successful in trading, it's a skill, right? It's a job, right? Just I always try to think about as you're running your own business, right? You have to have a trading plan. You have to write things down. You have to keep a journal. You have to have goals, weekly, monthly, quarterly, quarter over quarter, year over year. You have to have meetings. You have to write down an agenda. When you're managing business, trading is the same thing. It's a job. It's a skill, right? And if you think that you can just let somebody else do the job, right? If you can give it to your financial advisor, right? Or if you're gonna just follow Vlad's trades and just magically you're gonna make a lot of money, that doesn't work like that, right? Just like you can get a coach who's gonna teach you how to box, right? And he could be Mike Tyson of the world. That doesn't mean you're gonna be Mike Tyson, right? Why? Well, just because it's a skill. It's a skill that requires time, it requires commitment and training. So you have to invest into education, right? What does Tradespoon provide? For the most part, it provides not only signals and making money, but education, because you have to make a determination based on your own risk tolerance level. How many positions should you have and what's the position size, right? If you're managing hundreds of thousands of dollars, you've been doing it for 20, 30 years, you might have 10 positions, you might have 20 positions, right? If you've been trading for the past couple weeks, right? You probably should not have more than 4 positions, right? And you should not risk more than 2.5% of your account value. So you have to have a very strict rules, especially just irrelevant how long you've been trading in the market, you have to have strict rules that you don't break them. And initially, when you start trading, you break all the rules. That's what I did. And I see that what all the traders do. But as you proceed and going forward, you have to make sure you don't break the rules and you write them down, right? It's a repetitive process. It's a memory. It's, your brain has to have a memory muscle, right? Brain, just like if you want to do push-ups, you can't just watch somebody do push-ups and then magically you're going to do 50 push-ups, right? You have to watch them, how they do it, what's the right way to do it, what's the wrong way to do it. But then every morning you have to wake up and do, today you do 10 push-ups, tomorrow you do, that's what I tell my 7-year-old. If you want to be strong, like that, then you have to eat more. He's a very skinny guy, unlike me. And you have to do more push-ups, right? I always joke around with him. Trading is the same thing. You have to trade every day or every week, right? And if you want to day trade, you have to trade every day, right? If you want to trade, manage your money on a weekly basis, you have to trade on a weekly basis, right? If you want to just rebalance your 401k, well, then you have to do it every quarter, right? You can't skip a quarter. Even if you're just managing your 401k, it requires time, commitment, research, right? So you have to commit to education. Tradespoon gives you live events. Every time I trade, there is a live event. And even if I trade outside of the live event, I would review it at the closing bell or the next morning. So I encourage you to invest into education. That means you have to commit time to either participate live in the webinar or watch the recordings in the webinar. And in terms of rules, if you follow my trading room, where we do live trading room, I always talk about cash, right? If you think that we have reached the bottom, right? If you think we have reached the bottom, I would propose 30% of your portfolio should be in cash. Because the idea that we might retest the bottom during summer or October, and you want to have cash to start buying. If you think we have not reached the bottom, I would say your cash should be more. It should be 50% in cash, right? Because we're going to probably reach the bottom and probably break it at some point. So you need more cash to deploy to start buying when stocks like Tesla, is at a steep discount and falls. And the next one is risk management, right? Portfolio drawdown. I propose, especially for the first few months of training, or even first few years of training, Depends on where you are on your journey and how disciplined you are. You only have 4 positions on an average and 2.5% account value. Because, you know, one of the main arguments for that, if I look at spiders, right, in the past, since April of 21, right, since April of 21, we are trading at the same level, right? We were exactly, you know, 20% above that level, right? And we were 20% below that level, right? So, you know, for the next 2 years, we could be at the same level, right? In the next 2 years, you know, I think we're gonna do this, right? Or I actually think we're gonna go lower, right? We're gonna go higher, and then we're gonna go lower, right? So we could be doing this for, you know, 2, 3, 4 years, right? So if that's the case, right, you gotta, you know, you have to have rules, right? You have to follow them. That is the argument to have only 4 positions, right? Because even this last rally, they were saying out of 500 S&P 500 stocks, only 20 of them, somebody just today on the TV said only 10 of them. So literally, what is it, 10? It's 1%, 2%. So, okay, whether it's 2 or 4%, only 2% of stocks are responsible for the last 20% rally, right? So for to find these 2% out of 100 requires a very good skills in terms of reading, you know, quarterly, you know, sitting at the conference, watching the tone of the CEOs, figuring out their cash flow, and just not piling into a trend, right? Have your own analysis. So very difficult. Majority of the people cannot do this. I cannot do this, and majority of the people cannot do this successfully, right? Long period over time. So for that reason, I propose 4 stocks because we do have models, right? We have active trader, we have weekly trader. We do have models that will tell you which stocks are outperforming, right? So we will tell you what those stocks, but there is no reason to have more than 4 of these positions, right? Because depending on how popular these stocks, you know, people are like NVIDIA, people are piling into the trend. All the models identify that NVIDIA and Apple are the outperformers, but at some point it's going to roll over. So if you have more than 4 positions, it's very hard for you to manage them. So I propose 4 positions and the maximum loss of 2.5% per account value, right? How do you determine 2.5% account value? We do have tools. So if you're doing short-term trading, right, this model basically tells you, listen, if we drop below 406, 405, which is the 2-week lows, right? The 2-week lows is about 405, 406. If we drop below that level, then we have set the top, probably for the rest of the year. So then you probably want to be more aggressive on the downside, hedge your portfolio more aggressive. So that's your kind of a line in the sand for the next 10 days. And if we do reach 420, again, market is overbought. So at 406, maybe you want to buy if you're aggressive short-term trader because you think that level will hold. But if we reach, you know, January, February high, you probably want to short because the market is overbought, right? So we tell you support and resistance. So if you're doing short-term trading, basically if you buy in spiders, let's say today at, what is spiders trading, 411, you have 1% risk, right, on the $10,000 portfolio. Okay, if you're doing short-term trading, you can invest $10,000, right? If you're doing day trading or aggressive trader, you take $10,000, your stop loss is 1%, right? So you're risking $100. Maybe you put $10,000 at 406, and you know 1% is $100, and then you put another $10,000 of S&P. Am I doing this calculation correctly? Right. Okay, 1%, right? If you're doing short-term aggressive trader, right, you're thinking about hours or days, maybe 1 week. So then your support is 406, right? And you invest $10,000 at a time. If you're not comfortable, because we can reach 406 by the end of today, right? I mean, something happens in the market, you have sharp pullback. So if you're not comfortable, you know, below 406, if we do drop below 406, the next level would be 400, right? So we could be at 400, you know, early next week once the earnings start, right? We are already retesting this key support at 410, right? We actually today low 410, right? So we're knocking on the door of 410 multiple times. If we break 410, we will be at 406 very quickly. So next week we could be at 406. So then means that, you know, you're thinking about more weeks. The next level is 400. So maybe instead of putting $10,000 into S&P, you put only 5,000, right? Because if you buy it at 410 and it drops at 400, that's 2%. 2% of 5,000 is $100, right? So the idea, if you average account is $10,000, you always look at these support and resistance levels, and you ask yourself, how much am I going to be down at these levels? And if the answer is $100, right, on $10,000 account, and you have a strong opinion that we have reached the bottom and market is heading higher, great, then that's the trade, right? That's the trade. If you invest $10,000 and then when we reach 406, you decide, well, I'm going to wait a little bit longer because, you know, I believe that, you know, Apple and Microsoft are going to hit a home run, and then they don't, and we reach 400 level, then all of a sudden, if you invested $10,000 and the market is down, you know, more than 2.5%, then you're down more than $250, right? So the idea is to never be on the $10,000 account. This is a trader's market. I would encourage to take any position and split it in two. Never be down more than $100, right? You can be a bull, you can be a bear, you can think sideways or not have an opinion, but you look at these tools and you say, okay, if I'm thinking about days and weeks, at 405, I want to be down less than $100. If I'm thinking about, you know, days. If I'm thinking about hours, you know, probably 410 is your support, right? If I'm thinking about weeks or month, I would size it to 380, right? Because if we don't hold 400, well, we're going to be at 380 rather quickly, right? It could be a couple of weeks and we're at 380, right? Especially after the next 2 weeks, earnings are going to be done, and we're going to ask for what is the next catalyst to take the market higher. Well, we don't have China reopening, we don't have avoidance of energy crisis in Europe. You know, I mean, there could be some other catalysts like end of Russia-Ukraine conflict, that's possible, or something else along those lines. But if not, and the earnings are weak and we're not hitting home runs, then people, and we're going to a summer, which usually not a good time of the year to hold long position, then we could rather quickly be at 380. So then the same process at 380, you do not want to be down more than $250. So if you buy an S&P at 380, 30, you know, this is what, how much down? 10%, 8%, $30, 8%. So 8%. Again, then how much can you do? You can't do 5,000, so maybe you do $2,000, right? You invest $2,000 in S&P out of 10,000, and if it's down 8%, okay, you're down $160, right? You're down, and then you can make a decision. You know, will March and December low hold or will it not? Majority of you said that October low is there, then probably, you know, you should be buyer at 380. So that is the most important skill to have, right? Is the risk management. And if you knew, you really don't have to be, you know, all you need to practice. If I had to go back when I started trading, that is something I wish I learned, because my number one goal when I started trading is finding the next stocks like Nvidia, right? That's all I care about. Like, how can I find another Nvidia? And in bull market, maybe it makes sense, right? You buy an Nvidia, you buy Tesla, and they keep going up to infinity. Who cares about risk management? But now we're in a different market, right? We're in a market where in the past 2 years, we didn't go anywhere. So it's not, finding Nvidia is important. I don't want to underestimate this, or Tesla or Bitcoin, but risk management is a lot more important, right? So I would concentrate my mental energy on getting the mechanics of the trade, right? Not have more than 4 positions, not risk more than $100 per trade, and just do 50 trades, do 100 trades where you'd never lose more than $100. Once you do that, then you're going to be a much better trader. You're going to document all your trades. You're going to keep a journal, and you'll see how you perform. And then it's a business, right? You can set goals. You can set your weekly goals. You can set your quarterly goals, annual goals, and you can, based on how much money you manage, and, you know, you can, you know, that would be the goal, right? If, you know, if I make, you know, 20, 30% a year on my portfolio, that is my goal, right? And every year, every quarter, I continue to increase that number. So that's the goal, right?